Hey, Inside Crypto people, welcome back to the latest episode of Bitcoin Weekly. And boy, has it been a morning. Bitcoin is past 70K. Have Bitcoin inflows into the ETFs dried up? $1 billion worth of Bitcoin exited the ETFs last week. We also talk about 3 reasons why Bitcoin price is up today. The EU's talking about an anti-crypto money laundering law. That's very interesting. Lots to dig into there. And the final story for today is Binance ends support for USDC on the Tron network. So we talk about Tron, what's going on there. Lots of stuff to talk about, lots of stories. As usual, let's dive into Bitcoin's current price. So Bitcoin's currently at $70,480.41, up 5.4%. Before I went to bed last night, roughly about 12 hours ago, Bitcoin was at like 67,000 and it's just been going up and up, which is fantastic because we did get that low of, I think, $63,000 last week when it went all the way down from $73,000 to $63,000. Now, as to the reasons why the price is going up, I think, and again, this is just my opinion, not financial advice, please do your own research, is basically last week, people who were in GBTC, people who had bought Bitcoin at lower prices were like, okay, when Bitcoin hit $73,000 or $72,000, whatever your local equivalent is, people are like, okay, time to sell, time to take some profits. And that's exactly what people did. People sold some. They're like, okay, as it drops, I'm going to buy some more. And probably this is what people are doing. People are like, okay, it's down, I'm going to buy some more. It could be also other macroeconomic factors. We'll talk about that later in our story of 3 reasons why Bitcoin is up. There's an interesting metric that I've heard about that I've just never got into a lot of detail into, but we'll talk about that later. But anyway, let's jump into today's first story. All right, today's first story: have inflows into Bitcoin funds dried up. The inflows into 11 new Bitcoin exchange-traded funds that receive US regulatory approval in January went into the reverse this week. Of course, this is from last week's story. Investors will be watching daily data to see if the 850 million that leaked out of the ETFs was a blip or a harbinger of a bigger pullback for the world's biggest cryptocurrency. So as we're reading this story, we know it was a blip, probably, but have the funds trapped? No, and again, I don't think so. I don't think anybody thinks so. It's just what happened. It's natural. If you're somebody who's new to cryptocurrency, you're like, okay, I'm going to hodl. But the general advice that most people suggest is if you're into cryptocurrency or digital assets, it is volatile. And I would definitely check out some videos on the 21 Shares channel about this. But that the suggestion is that you should take some profits now and then, right? Some people in crypto, there's the theme or the meme of diamond hands and you hold forever and eventually everything's going to hit $1 million and you're going to be super rich and living on a yacht somewhere in the Mediterranean. But realistically, and again, I could be wrong, right? Like it does pay to sell when it's high, and then when it drops down, you use some of those profits and buy again. So I think it's just people selling, just people taking advantage of the high price and taking some profits and stashing the cash, right? It is tax season somewhere. Here in Taiwan, it's tax season in May, so maybe you're selling up before tax season so that, you do, it blends well with the taxes, something along those lines. But maybe that's a reason. So next story is, again, following on from the previous stories, record 1 billion exited crypto funds last week, according to CoinShares. Altcoins fared better last week with $16 million of net inflows, notably into Polkadot, Avalanche, and Litecoin. That is really interesting. If you're on social media, if you're on YouTube, you would see a lot of people are speculating that this is going to be the altcoin season is coming up or it's starting soon. If you're not familiar with that, the altcoin season are all these smaller coins, and people are generally saying this is the time for life-changing money, etc. In the sense of that altcoins are far easier to buy, significant numbers of them. I saw a video about Floki, which is a meme coin, definitely not an altcoin, but people are talking about that. And of course, there's changes in Avalanche, Litecoin. I don't think though so much, though I do know people are still mining Litecoin. Polkadot, of course, is another EVM compatible chain, and they have some decent changes there. Interesting. And then you can see the bottom line of the picture, right? $2 billion in exits from Grayscale's Bitcoin Trust last week. There's been a lot of selling pressure from Grayscale, which of course makes sense. And we've talked about that on the live stream on Sunday. If you don't know, I'm live streaming from the Inside Crypto channel on Sunday or Saturday. I haven't exactly set a schedule yet. Probably about 20 minutes or so because I don't have the greatest voice anymore. But we talk about the news, right? And again, there's so much news going on cryptocurrency. So a live stream does help cover everything. So Again, people exiting out of Grayscale is no surprise. Grayscale is the most expensive in terms of fees. So it's some people like, okay, let's get out Grayscale and go into Invesco or go into other potential ETFs. So that's interesting. So we know the exit is done. Prices have gone back up, and we'll have to see where do they go from here. Today's third story, again from 𝕊𝕦𝕡𝕡𝕠𝕕𝕡, 3 reasons why Bitcoin price is up today. Again, we've covered her before. I think this is a regular segment in Cointelegraph, so definitely read the entire story. One of the metrics I want to talk about today is the spike in Bitcoin age consumed metric. So this is from Sentiment. Definitely go check them out. Also support Cointelegraph as well. Basically, what this is that it shows that the number of old Bitcoin wallets that have been dormant are starting to move. So it says age consumed is a metric that tracks the movement of previously idle Bitcoins. The metric shows the number of Bitcoin changing addresses daily multiplied by the number of days since they moved. Spikes signal a potential increase in price volatility, right? So the immediate thing, you're like, okay, these people are going to sell, but it could be them selling some Bitcoin, buying some altcoins. It could be them buying more Bitcoin and from an inactive wallet going into an active, or from an inactive wallet is buying more Bitcoin into now an active wallet who decided to buy Bitcoin again. So volatility is definitely true, and it's very true that there are a lot of Bitcoin. If you look at our Dune dashboard, there's a lot of Bitcoin now, quote unquote, hodlers who suddenly decide, okay, now's the time I'm going to sell my thousands of Bitcoin, right? People who started mining Bitcoin in 2013, where a regular computer could mine 20, 30, 40 Bitcoin, which at current prices is a fair amount of money. So this is a good metric to keep an eye out on, because as wallets become active, they could be selling, they could be buying, they could be moving into altcoins. And lots of Bitcoin people are into altcoins because Bitcoin is the OG, the original coin, the original cryptocurrency, the original blockchain. But there are lots of interesting new kids on the block: Avalanche, Ethereum, talk about all the L2s as well. This is something good to understand, right? And again, I think at a very surface level, which is what I want you guys to think about this as, is it's something to keep at the back of your mind when you're looking at this data and, okay, let's look at all the spikes. And as you can see on the actual picture, the spikes at definite days, like the beginning, the end of January, the middle of January, the 17th of February, the end of February as well. It's like addresses are coming alive at this point to buy or sell or change into other things. So definitely keep that in mind, and maybe keep this in your browser so that you check this every now and again, so that when you are purchasing or selling or doing some research, you're like, okay, this is a metric I can think about. So eventually, I hope as you discover more of these metrics, you guys will have all of this saved on your browser, so that when you're considering buying or selling, you're like, okay, I've looked at all these metrics and I understand them, and now I can make informed decisions about my potential crypto strategy. All right, today's second to last story: the EU toughens laws regarding anonymous crypto accounts. And again, this makes sense. I know a lot of people are like, this is terrible. Now I can't be private and anonymous. But look, it is a fact. It is a minority. I want to emphasize minority of people who are using privacy anonymizing systems like Tornado Cash, or using privacy coins like Monero or other coins to hide what they're doing. And a lot of people are just doing that because they do want to preserve their privacy. They don't want the government knowing. But at the same time, a big story breaking this morning when I woke up is 17 or 18 Chinese hackers had hacked people for the last 10 years and operating out of the US and the UK. And that's terrible. And of course, they used cryptocurrency to hide what they were doing. And this is bad. You don't want bad state actors hacking people who work at high-level government organizations, or stealing crypto from other people and transferring back to their home country in the case of North Korea. I think it makes sense in terms of, and again, go back to our Lionsgate Network episode where we talked to 𝕊𝕦𝕡𝕠𝕕𝕒 about the number of cryptocurrency hacks and scams is increasing. It's just none of it is being reported, according to his opinion. I think it makes sense. I think there's got to be a way we can allow for privacy to happen, but at the same time, to be able to keep an eye out on criminal organizations, on bad state actors. What that solution is, I don't know. Maybe zero knowledge plays a role in that, but we'll have to see what happens in the future. Let's move on to today's last story. Today's last story is Binance to end support for USDC stablecoin on Tron blockchain network. This is really interesting. And again, if you go back to our data visualization, we saw that Tron has had some spikes in the last year or so, or last 2 years in terms of network activity. But for the most part, not many people are using Tron. People are using Avalanche, people are using Polygon, people are using the L2s, right? Like Blast, like Mantle, like Base, that sort of stuff. But Tron, I've not seen a story about Tron in the last few weeks. Tron was a network I used here in Taiwan for my local exchange because it was $1 do transfers in terms of transferring USDT or USDC. This makes a lot of sense. I've seen people end support for the Tron blockchain. What does that say about Tron? I don't know. What's going to happen to Tron in the future? I also don't know, right? The story also mentions Circle saying that they will stop creating USDC on the Tron network. So if you are a Tron user, let me know down in the comments, right? Is activity happening on Tron? Is Tron a thing of the future? I don't believe so. I definitely think we're seeing a solidification of the networks that are going to have a future, like Polygon, like Avalanche, like a lot of the L2s, like Ethereum. Like Ethereum is still going to be a thing, of course, Bitcoin for sure. But yeah, so if you're a person who is using Tron, I'd definitely keep an eye on this. Maybe consider cashing out and moving into other networks. And then that is the final story for today. All right, guys, I hope you enjoyed today's story. I'm glad to be doing Bitcoin Weekly. I'm glad of the support. I've been seeing a pickup of support on Instagram, on TikTok, so I appreciate that. Keep an eye out for that. I still have not secured a guest for April, and if I don't, then we're just going to keep doing Bitcoin Weekly, and we're going to try and do 3 Bitcoin stories, 2 non-Bitcoin stories, and let me know what you guys think and comment down. Participate, send me some comments on Instagram and LinkedIn and those places. And then, as always, thank you guys for the support, and we will see you guys same time next week for more Bitcoin, more crypto, more digital assets, and more fun. Take care, guys.